We got Solomon's Lot back on the show. Longtime friend, been on the show before. Has a very interesting property that they're working with. Lucas, what's going on with Matthew? Cue us up here as far as what the show is going to be about.
Well, I saw Matt in a space. He was holding a space recently, and had some news coming with regards to a property that Solomon's Lot had was working with to open up a new concept, um, uh, with their business model with putting properties on blockchain and tokenizing properties. Um, and then I saw it announced, and it is no less than Kanye's mansion in California, so in Malibu. So I asked Matt to come on to tell us more about it. Matt, good morning, welcome. Uh, what's going on over at Souls Lot?
Yeah, for sure. Well, we are partnering with a group called Belwood Investments that's done fractional real estate in the note buying space and has amassed a $150 million portfolio. And, they allow people to essentially, you know, invest in real estate by getting their own note on a property. And I, talked to the owner and I said, hey, we're on chain. We derive off of one deed of trust. So you don't have to have one, per person. You have one for many. And he's like, hey, I really think this could take us to the next level. They were actually, because of the Palisades fire and things like that, in a refinance on the Tadeo Ando property. And I'm like, hey, maybe this would be a great pilot property. We ended up getting the green light from Christie's brokerage out there to, no, we're working on it. So no guarantees, be able to list on the MLS minority or purchases or DAX, which we are, branding smart deeds right now. And it's all through a membership. So I actually got to start a new company up above Souls Lot with the founder of Belwood and Alex, my long time attorney for Souls Lot. And so she's like, you need to do it through a membership, kind of like it comes with a bunch of benefits, not just the fact that you can buy property in the membership, but it also comes with inside access to the property, events, education, a bunch of free stuff. And so we'll start charging for the membership, but right now the membership's waived, or like $100 with a minimum contribution to this property. And so we're essentially using a forward sale instead of debt for the majority of this project going forward. And I had some people super interested in the idea of democratizing ultra luxury properties. So we've got a lot of interest around that, but it's definitely going to allow for us to, appeal or market to, higher ticket sizes. And I think the membership is really cool.
So the Smart Deeds is a rebrand of the DAX that we're familiar with from Souls Lot.
Yeah, it's like a brand, almost like, white label. But yeah, it's still Souls Lot's IP. Right now we're just kind of testing it out, and yes.
And so people can go buy a fraction of the value of Kanye's former mansion. It's up for sale, and then they will see a return on the sale of that property.
So yes, we're in a pre-launch right now, so they can actually make an indication of interest. So it's kind of cool that we're able to kind of get commitments in before even moving on a property, through escrows and this is a Third Web audited contract. The point is that we actually don't have to get it all put in place. We can just have people get commitments in, and if we hit level, we can go live on it. The goal here
What level of commitment do you need to have before you can go live?
We're targeting around 10 million here. Now, we don't expect most of that to be on chain. A lot of off-chain activity, people interested in moving on chain, but people really seeing the blockchain component as kind of an add-on to their original structure, and then just blockchain as an internal management of purchases. But most of the interest has been kind of, talking to people over the phone, networking. We have some institutional interest, and then we hope that Christie's is definitely going to bring in a lot of interest through the MLS. But it's kind of the old-fashioned, like, pick up the phone and network right now.
And did you say that Bellwood, you sought out Bellwood Investment? How did that contact come into being?
We both spoke at a conference or a little panel at LA Tech Week. And I just, we talked. I approached him. I'm like, hey, I think it's a lot cheaper to do it this way. I think I can save you a lot of money, and because we're on chain, you can really go global with the people that can participate. And we just got a ton of interest around the Malibu property, just being in the situation that they were in. It was selling for 39 million. The buyer actually backed out or couldn't come up with the financing. So Belwood kind of went back to the board, and they're like, all right, we're going to finish this. They were pretty low in the capital stack. And so we were able to negotiate, hopefully, a better alternative to an entire outright refinance. And so that's kind of where it started.
And whenever you're opening that conversation, where does the blockchain aspect of it enter in? Do you lead with that? Is that where the interest is now? Do you lead
So I
with?
think, yeah, that definitely did when I talked to him. Now, when talking to others, the membership is definitely what's interesting. Our goal is, to allow anyone, whether they're on chain or not on chain, to participate in ultra luxury properties that aren't just assets but experiences. So if you can imagine, a lot of these, people, they don't really understand the blockchain, and that can be kind of scary. I think a lot of them still like have a bad taste in their mouth from FTX and NFTs. So it's very hard to approach that and navigate that. So it's a lot about, I think, the same approach Chia took, where you put in a bunch of traditional finance guys around a good idea and allow for innovation with really, really strong controls and rails. So that's where it's at. We're just being allowed to innovate in and around these hyper luxury properties with people who are interested in larger ticket sizes, like institutions in the millions, and then $50,000 to $100,000 purchases around the existing network. So that's the way we see it.
And you said whenever you when you first spoke with Bellwood, that part of the idea, the proposal that you brought to them was an explanation of where the DAX could save them a lot of money. What specifically, what were you targeting in bringing that to them?
Yeah, for sure. Well, like I said, like, if, for example, let's say they have 400 people on one property, or however many, 100 people, and each one has an individual note, or maybe some are coupled into one note, or some are put in, a 35-member LLC on one note. Like that path is, totally reasonable and what most people would do, but no one had ever derived interest off of one note or one deed. And so I kind of explained to him, it's like, look, we just record one deed and then we assign off of that. So there was that saves hundreds of dollars per person, realistically. You don't have to go through the notary. You don't have to go through the documents. He's got an incredibly robust system, I must say, where, you can pay in the app. You can, do all the the note stuff pretty much in the app. He's definitely got the app down. And then the other aspect of it was just like, I think the novelty and the global reach, being able to pay with crypto, being able to, I think, really ignite the go-to-market around it as well. I think there's just an incredibly healthy marketing strategy that goes with it. So all in all, like, I think it just took a lot of people that could take what we built and say, how about you do it this way instead? And, we haven't raised a lot of money, and, our goal was definitely to raise a little bit. But at this point, like, we're more looking at like, how can we work together? How can we, allow this new company to acquire Soulslot? And we've had some VC interest around the new company, and so we're just letting people kind of tell us what the way they think we should do it is. And right now, the vision is definitely to put Belwood on chain, but for the near term, it's going to be a lot of education and hand holding and events, and just networking in the existing community around Belwood and the LA market, and expand from there.
Well, good ideas have wheels. I'm glad that they're interested, and I'm glad that they have um, I'm glad that they have you to help educate them with regards. JP Morgan just came out with a coin on the base network. I'm sure you saw it. Uh, I thought actually of you and the Kanye House property whenever I saw that launch, because I thought, wow, here we've removed a massive barrier for money to be flowing into tokenized assets, like you're putting on chain. Any any thoughts with regards to the JP Morgan chain? Any discussions or any internal conversations about how that might affect Soul's Lot and Smart Deeds?
I think that, like, their base network is where we are starting with Smart Deeds, and that is because of some of the restrictions that you can allow, including like soulbound NFTs and whitelisting. It's just like, my partner and attorney, pretty much just said, like, I don't want to do all of this trading right now. Like, I don't, and so I think that base is friendly, base is safe, and base is a place for a lot of people who are new to start. So we're definitely, following in that. We think that, like, companies' own coins are going to be popular. Like we do, for example, with this Ondo property, there's no guarantees, but our goal would be to actually buy back these Smart Deeds from the members in exchange for some sort of token, and possibly airdrop tokens to some of our higher tier members to, see if we could keep this property as a portfolio property in the membership for asset, or for, revenue generating, like Airbnb or health, care spa, something like that, where the members can get cash flow from it or benefit from it based on their tiers through free access or discounted access. So that's where we think a lot of these luxury properties are going to end up. They're going to turn into shared experiences owned by members that have revenue generating components, but also have like consumptive membership benefit perks to them as well. And I'm sure you guys get the whole consumptive membership benefit.
So if I want
side
to
of
throw
it.
a party at Kanye's house, the quickest way to do it, it would be to buy an NFT, and then that gets me a week.
Um, it would give you access to discounts, or depending on the tier, yeah, it could definitely give you some free time there. But we'll also, so memberships are free right now, and that's kind of like I think a lot of people do get it, but a lot of people don't get it yet. It's like, we will be charging, we could say, for like the top tier, $300,000 for life, but we're giving it away right now because of the early movers. We need them, right? But we're essentially subsidizing the very top members with all the returns and all the money in exchange for a larger membership fee, and then we're making more money off of the lower tiers just because the trades, the returns are not as high, and the perks we charge for things, so it's a classic structure, but yeah.
And when you say trades, you're talking about the sales of the properties and
And the DAX.
the DAC.
So
You mean secondary trades on the DAX?
primary too. So like a DAC has a par value, like we've seen on SolSlot, like 1.14, 1.15. In this case, we can originate a forward sale at, like, let's say 1.33, and then we can trade it at 1.25, right? Because that member tier, that's their exchange rate. So there's 8 points, which is likely paid to a brokerage and realtors, but the lower the ticket size, the lower the tier. Whereas, like, if you brought in 300 grand to this, you would get the 1.33. So that's what I mean by we're subsidizing or giving the entire return away, and there's no trade in the middle. There's no arbitrage in between the origination and the assignment. Does that make sense?
Yes, it does. Of course, I don't think about selling my DAX or listing them, but now I do.
And you could trade between each other, like between properties. And so
Mhm.
then the hopeful idea is you're really customizing your yield, because DAX are just like one product. We'll have cash flowing real estate products too, where maybe you're like, hey, you know what? It was fun to be in the Ondo. I enjoyed all the perks that came with it and the return. I'm going to let someone else buy my Ondo position in exchange for this Montecito position, or this, like, I know Diddy's house is one that, is very reasonable to be able to purchase at a discount. So you're seeing a lot of these ultra luxury properties at probably irrationally low prices. That's kind of the thesis. And if you turn them into working properties or restore them or renovate them, the value inside the membership by the members is kind of insulated to what anyone else thinks. And that's what's unique about a membership structure. But we're very hopeful and optimistic that there's going to be a lot of these people that want to own luxury assets together, maybe like boats or jets or whatever, that serve them and generate revenue, but also allow them to have lifestyle that they want. And right now, LA and the market around it is like very, in my opinion, unreasonably cheap, just based on what stuff used to trade at. So we'll see.
Yeah, you're bringing a more, I think, a more realized and practical product to, a lot of DAOs had some of these ideas but did not have the tool in order to realize it. You've put some real work into making that happen, with the DAX, with the smart deeds. What do you see more broadly in the property market in the United States of late?
Yeah, I don't think. Yeah, again, I think like portfolio pieces make sense to some degree. I think that that thesis is something that people need to agree with. Like, does it make sense to hold these rare pieces, these $70,000, sorry, 70,000 square foot, Polo Ranch properties, like these vineyards? Like, do those make sense? Are those impermeable? I do expect, like, for example, from the DAC market and things like that, like from the fractional real estate market, I do think that you're going to lose your lower tier prices because there's just not going to be as much action there. The rich are likely going to get richer. So there's some scary, just dystopian factors there. But that's that's a reality. But I think that most people are looking at emerging markets. My head goes to Jamaica. Like, what can you do to kind of bring back Jamaica, restore Jamaica? Like, I know a lot of people are like, Dubai, emerging markets are much more attractive. But the strange thing is like, you have a lot of people talking about a lot of like theoretical things, not a lot of people actually doing anything. So it's going to be interesting to see what these people who can afford to make these kind of purchases want to do. And that's what, again, the membership is about, is listening to them, letting them kind of talk amongst themselves to decide what sort of things they're interested in buying or doing, and then putting analysts and underwriting around that process to make sure that we provide the membership opportunities that they can choose to participate in and bond and hit an initial commitment, so that it's a DeFi protocol, right? Like, the goal here is to build a DeFi protocol inside the membership.
You mentioned the Polo Ranch,
Well, actually, let me ask you a quick question. This kind of reminds me of maybe a way of doing a sort of timeshare, but like a fractionalized ownership timeshare. Is that a way to think about it? Because you're getting membership and access.
So definitely, the one that I like, so there's a couple things that are better. One, that it generates revenue passed back to the membership, so you can kind of think of it like a money market, or not an ETF, because there's the choice, but it has these real cash flow components that timeshares don't, because they're essentially stagnant, or everyone's sharing them. So whenever they're not being used, either for events, like these are more like event spaces, like larger resorts, like things that people want but prefer to just receive cash flow from, and may use like once in 3 years or something like that. The other side of it is, like, it does function somewhat similarly to the trust that Marriott set up. I think it was Marriott, where they you can buy into the trust shares that owns all the Marriott properties, that allow you to use all the properties, but your points also go up in value because they're actually shares in the trust. And as the market appreciates, but they have their dues to cover the the cost. It's like HOA, so it's like a unique structure. People do kind of say it's like a timeshare. It's like, well, we might sell the properties, right? You might, either way, like, you either get the cash, or you get the experiences and revenue from it. But the objective here is really to make sure that they're working properties and have real revenue generating components to them, which I think makes it a little bit unique from a timeshare. But yes, timeshares are something that feels similar, except that they don't make any money for you.
timeshares with liquidity.
Yeah.
You mentioned the Polo Ranch on one hand, and these large, these I don't know, large, very very niche properties that we have, in the United States, ostensibly around the world, but especially in the United States. And you said the rich get richer. I don't know if that's going to, well, maybe that continues to happen. It would seem to me that the Trump administration um, has been very targeted in trying to put pressure on that gilded economy that we've lived in for the last 20 or 30 years. So it would seem to me that um, the fractionalizing and giving options, um, and keeping properties like the Polo Ranch, or large extravagant properties, uh, whole in some ways, instead of just breaking them apart. Um, I think there's something there. You also mentioned Jamaica, and I'm glad you mentioned that too, because I think that the another aspect of the Trump administration's international policy is going to be to try to raise property rates, the value of property rates around the world.
Mm-hmm.
So how 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 much have you been looking at, and how much exposure do you have to properties outside the United States?
Um, I've got to wrap it up after this question, and I appreciate you guys for having me back on, and the support. Hopefully, we can finish this, and it'll be in Art Basel and Wall Street Journal, and it'll be super successful, and I'll have more time to hang out, because, as you know, it's been something that I've been working on for years. So just finally have the opportunity to scale this is, pretty much meant I have to be heads down. But trying to bring it all back to the Grove, as they say. To answer that question, I don't have a lot of time to really do the research, but the people around me that do seem to, again, there's a lot of, I don't want to do this because I think this is better, and whether or not that's an excuse to not participate or that is the correct thesis, I'm not sure, but I do hear a lot about emerging markets. I think that people are just standing across the line right now on which way does this market go, because I don't know if we have issues in the equities market, whether that really means I don't know the correlation with that emerging markets. I do think that Dubai is a very hot area. I don't know what the the higher end market wants to do. I think emerging markets are scary. I think that Ukraine probably makes a lot of sense post-war, but the risk is so high, and you're likely looking at like 18-month turnarounds. I think people want to move into emerging markets. I don't think that they want to move into like middle-class American markets right now. I think at the other side, like Section 8 is the lower end is it's really bifurcated. And what that means for emerging markets, I don't know, but I hear a lot of people talking about it. Right now we're going to focus on ultra luxury. We hope that that's relatively impermeable to what's coming next. Hope it's insular, and a way for people to, own real assets without worrying about some dystopian, downside. But I think that there's a lot of uncertainty right now, more than I've ever felt in the real estate market, and I don't know what is really going to move or what's not going to move. And so I do think that I will say this: the light at the end of the tunnel is like when I talk to people like the people over at Christie's, they're like, we think this is how ultra luxury properties will move in the future. And so it is kind of like this Wild West, like, okay, cool, well, let's just you tokenize it. Let's just put it on chain. Let's just let everyone own it. And I think to a degree, that's always been our vision. I don't know how much of everyone owning it is everyone owning it, and how much of it is people who can afford to, purchase $100,000 of it owning it is. But I'd like to see it to the, the more democratized side. But in reality, it very well may just be, a higher end membership. So we shall see. But thank you for having me on, guys. It's great to catch up and share a little bit about what we're trying to do. And hopefully we get it across the board in the next 2 to 3 weeks, and we're live. So definitely excited to talk again, maybe mid-December after a successful launch, or post-mortem if not, and figure out what we're doing next.
And just so there's the follow-up, if people want to keep track of it and know what's happening in the next couple of weeks, just keep watching at Soul's Lot, or is there another place that
No, yeah, I would check out, like, I love the populist.co domain. Right now we're really trying to do concierge style reach outs, where if you're interested, we'll call you. You can read the manifesto. Yeah, you can read the membership tiers, and then you can get an invite to the membership. And then smartdeeds.ai, you can actually purchase directly on Base. There's a KYC check. If you're in the US, international, there's no KYC check, but you may be limited to what you can participate in the US. And with that, yeah, most of the action's happening over there right now. I know we've got a couple more properties coming to Soul's Lot, and then I know I've got to go pick up a couple of checks, or at least the White Bluff check for for that, and then get that out on chain. So we're still moving along at SolSlot, and but we're definitely trying to move forward with this. So follow, reach out. I'll personally reach out to anyone who puts in their invite information into Populous, and we can chat more in depth if you're interested in learning more. And yeah.
All right, Matt. Well, thanks a lot for coming by. We really appreciate it.
Yeah, you too, Grant. Yep. I'll talk to you guys soon.
All right.
Thanks, Lucas.
Yep. Glad to have you, Matt.
Yeah.
Best of luck to you.
Yep. Thank y'all. Yeah, y'all too.
So online membership to luxury properties and the pivot that's happened as far as the startup company that is SolSlot. Lucas, this is one of the things that for me is super interesting whenever you get to hear a founder talking about their startup company. It's like you come into this thing with an idea about what you're going to do, and as you get further and further into it, you find the opportunity, and then the opportunity sorts of requires you to rethink what you were doing, or say, how can I mesh or meld what I was doing with maybe something else, and then it becomes the thing which is ultimately successful. I think that to me is a pretty interesting point to hear Matt saying that is the point, is what they've started to come around to, and that they're starting to think about it this way.
Yeah, I was glad to hear about how the relationship developed with the Bell Investments. I think that the turning towards the ultra luxury properties is ideal for the tool that they've invented for the realities in the American market. I do think there's a lot of pressure on the gilded class in America, more so than we might believe from what we read in the media or see on social media. And I think that fractionalizing those properties and reinventing the corporation almost or incorporations is what blockchain technology is designed to do. So that
Well, the other thing that comes to my mind, the ultra high end, sure, like, no problem there. Like that's clearly something that's desirable. The other thing that got me thinking as he started talking about it was event spaces. There's so much pressure on those, people trying to get access to a place to hold a wedding, hold some kind of a big event or a party. Those are booked out so far in advance. It just got me thinking about even that place that you reminded me of, that you're associated with, that kind of mansiony place. It's like, wow, it's got to be quite a bit of an opportunity even for the mid-level. Ultra high end, sure. I mean, I would probably never have a chance to walk through Kanye's mansion unless I was a part owner of it or had some kind of a real estate position in it. But those event spaces, seems like it just immediately bubbles to my mind that there'd be a lot of opportunity there as well. So I wouldn't be surprised at all to hear that they focus on this, kind of get some traction here, and then start to move down a little bit. That seems to be a very common way to build a business, is to focus on few customers that are high net worth, that can really move the needle, and then start to broaden the market a little bit more.
Yeah, I wondered though how much. How many regulatory hurdles there were. We didn't have enough time to get into it, and I didn't want to branch off into those questions. I wanted to hear more of what had been forming as possibilities with SolSlot and Matt's ventures, but I couldn't help but think there has been a grand shift in the in the regulatory thumb, as we've seen Trump, pardon CZ, tossing about pardoning Caroline and SBF. He mentioned FTX. I think that the Trump administration is considering a retelling of the FTX debacle and placing the blame on the government rather than any of the actors, SBF and Caroline especially, in what happened there. So and then I did mention J.P. Morgan. I think that we are seeing a very broad acceptance of what this means. The stain of the stain of I don't know, the early Bitcoin days, the dark web is being lifted from crypto, is being lifted from blockchain. So yes, and I'm glad that they're going for the luxury properties. I think you're right about the opportunities that opens up for owners of those properties, for democratizing that ownership. And it doesn't have to necessarily be. I feel like they were. I guess I'm rambling here. I feel like they were limited in what their opportunities were to the resale of the property. But I think that what's possible for them to engage in really opens up as blockchain becomes more acceptable and more
Well,
understood.
and the broadening of the international market, allowing for crypto to be the free flow of money into ideas like this in a somewhat unconstrained fashion. Maybe this is also the reimagining of real estate investment trusts, REITs that have been a traditional way to get access to property investments and returns, but this being maybe more of a direct membership style, it starts to look like some blending of a REIT and a timeshare and profit sharing. There's just a lot of cool ideas about how this could potentially work, and making it more free flowing with an international capital focus and crypto facilitating that. Whenever blockchain can do something better, it's very interesting to consider how that might open up a broader market and allow for some of the regulatory concerns to be centrally solved, and then allow for the free flow of capital. From that perspective, it's again a blockchain solving a real world problem and doing it better. Those are very interesting opportunities, and I think we have to keep a close eye on those.
And there's also the broader political shift with uh, well, Matt mentioned the 35-person LLC, and I thought, this is the new LLC, and it's an improved LLC because we begin to understand the problems of uh, the hidden identities of persons who are involved inside of LLCs. And as we have this, trend towards the quote unquote right or towards nationalism around the world, part of that is about knowing who owns and controls assets, properties, businesses within your country. To that too, Matt sort of demurred on the question with regards to the international aspect of what is possible here, um, uh, but I imagine that will be more and more. Uh, well, that's an avenue to grow in the future, and that's going to be a very broad avenue because um, I do think that we're going to see a rise in asset prices, especially property prices in all the countries around the world. And one of the hurdles that has, uh, there are many hurdles, but apart from those asset values being intentionally suppressed by various forces, there's also the problem with the chain of custody, who holds the deeds, and of course, moving that into blockchain uh, is uh, is a good solution than um, relying on some either government institution or private institution inside these various companies. Anyway, I don't know if I have that's I'm glad to have Matt on. I'm very excited and interested in what he's doing with Soul's Lot. I don't know if you had anything else to add, but that's all I've got.
I think just there's a bit of a call to action here. If you're interested in this, populist.co, we came in here thinking we were going to talk mostly about Souls Lot because it seemed like it was a fit. But if there's some kind of a pivot here and there's a new company, kind of a new business venture, this is starting to morph into something else. It's something to keep an eye on. So I think populist.co, if you hadn't had a chance to check it out, look through the membership, look through the manifesto. I'm definitely going to take a closer look at this. So that may be the only parting thought is if you came in thinking we were just going to talk about Solomon's Lot, this is another thing to take a look at because it sounds like it's morphing into pivoting to where that this is where some of the energy is happening for Matt and the rest of his team.
Amen. Likewise.
All right, and we'll see you next time on FOMO.